Good afternoon, everyone. It is Evan from the Trade Risk, Wednesday, April 15th, and I'm here with a market recap video. So let's jump right into it. Today we had a nice session for the bulls, up almost 0.5% today in the S&P 500. Let's take a look at where we are. You can see we are rallying back to the top end of this range, basically right near all-time highs. We got this band of resistance between 211 and 212 that we need to break through. That's sort of the last hurdle that the bulls need to get us through in order to break this market out. We failed here. We rolled over here back in late February. We came back down to support. It held, rallied back up to 211 in mid-March. We failed again, came back down to support, we bounced, and now we are back to this resistance level right around 211. You can see how sensitive the market is to it. We got right up there today, right in the mid-afternoon, and then we proceeded to kind of roll over, cool off into the close. So, the market still short term is very healthy. We are above all the fast moving averages. We came into the week, this was the candle here from Monday. We came into the week trying to push higher. We failed. We closed on the lows. We tried to, the bears tried to follow through on their move yesterday. They couldn't quite hold it together. Buyers came in, bought off of these lows here below 209. 208 is basically as low as we got, and then we saw some continuation to the upside today. So overall, I think, again, and this is sort of the way I've been for the past week and a half at least, is neutral with a bullish bias, because we are trending higher now in the short term. We're still in this contained holding pattern as far as I'm concerned until we can break above this final band here. But I think you need to respect the fact that the bulls are trying to push us, trying to get this market going again. Now, this is just the S&P. If we look at the IWM, you can see we are at new all-time highs today. Again, a little bit of a fade off of the highs. Nonetheless, outperformed today, up 0.75%. Complete, full, healthy uptrend here, no question. And then the Qs still in a bit of a holding pattern. They haven't quite taken out the recent highs here. You can see this 108 to 109 area is going to be the bigger challenge ahead of the Qs. And today you can see we're up just a little over 0.5%, and towards the top end of this range. So bottom line is, markets are trying to break out. A lot of individual names are breaking out. The indices, though, as a whole, especially if you're keying off the S&P 500, it's very constructive, not quite there for that bigger breakout. But in my mind, I think yesterday's lows is a great line in the sand to have now, 208, 20 or so. So all the way from 208.20 to 209, I would say, is the high level momentum kind of to keep this market pent up, looking as strong as it can. It needs to be basically above this area here, and so long as it does, I think it's fine to trade with a bullish bias. Now let's look at some other markets. We'll look at treasuries, TLT. You can see they're still just hanging out, closed basically flat on the day, 130 to 133. Nothing's really changed here. It's basically figuring out, compressing here, seeing which way the next directional move is going to be. Gold, similar camp here, had the nice thrust off of the lows at 110, rallied all the way to 118, and now it's just cooling off in its, sort of sloppy fashion, as gold always is. A nice candle today. Let's see if it gets some follow through. Ultimately, it needs to get back above, 117 or so to get some more follow through to the upside. Silver, same type of deal. Had a nice thrust off of the lows. It's pulling back. Let's see, it's still holding basically 50% of this move here in March. So if today's lows can stick, let's see if the bulls can try and get a second leg higher here. Ultimately need to get back above $16 to see some more upside action on silver. Let's look at USO. USO is a nice move today, up 5%. So you can see that this latest leg here, all the way starting from this candle here back on March 18th, has stuck, and it's been sloppy, and it has looked sort of doubtful along the way, especially right in here with this 3-day pullback at the end of March, and then even right here just a couple of weeks ago, early April, sorry, you had some doubt here that this could potentially roll over, but the oil bulls are getting it done. They're back to the top end of this range here, so $20. They basically almost tagged it today, the highs of the day. It's going to be a interesting test for them. This is where we basically rolled over back in February. So let's see if the oil bulls can get it done. Let's look at a weekly chart real quick to see what we're looking like. So clearly, a straight leg down here back from mid-July of 14 all the way into basically February of 2015, and you basically have this double bottom, slightly undercut low here, and we are now basically back to the top end here, like we just discussed. So if this is going to be a true bottom, this could be a base that we talk about for a while. This could be, we might overshoot $20 the next couple of days, come back down, retest the mid end of this, the middle of this range, come back up and test. This could really go sideways here for some time to put in a healthy, true intermediate bottom, or long-term bottom for that matter. So I think you can definitely play oil here. Just be aware of the kind of the landscape that you're in if you're inside of this trade here. Let's move on to natural gas. Natural gas had a big breakdown, a couple of weeks ago, basically below 1360. We had a nice little short setup in the trade risk premium service. But it's been hands-off since then. The trend is still down. It's trying to repair itself. Today, obviously, a good start, up 2.6%, but it still has more work to do. It needs to, get back above 1360, reclaim this breakdown level at least, get back in this range, and then, ultimately, for the long side, for me, natural gas, it's almost have to be above 1450, 1510, so it's a long ways away from me being interested in any type of long setup here. I think you can scalp it. There's opportunity both ways. Again, damage chart, it's volatile, so just plan your trades accordingly. What else? Let's move on to some of the technology names here. Start with Apple. We got earnings coming up. Again, all these names I'm about to run through, we are in the midst of earnings season, so just be aware of that. Check the dates, please, of all these holdings. Apple, happen to know, is next week. Still kind of hanging out here. Probably aren't going to get too much of a move now, one way or the other, into this release. I think it's going to be the release that is the catalyst here, so I don't have too much to say about it. Basically, we're going to have to see how it breaks this tightening pattern here. Basically 123 on the downside, call it 129 on the upside. That's essentially what we'd be looking at for the next directional move in Apple. Google closed just slightly green today, recovered, had some downside follow through today briefly, but the bulls did step in underneath 535. So Google is in rough shape here. It's kind of just in no man's land. There's just so many better setups and opportunities out there. I think Google is just a tough kind of waste of energy to really be trading this, so I don't have much to say about it. Netflix, so this was out on earnings, and let me see if I can see here. So it had a really nice pop here in the after hours. Looks like it's trading up around 536 right now. Let's look at a weekly chart. So 536, clearly all-time highs in Netflix right now. If these after hour prices stick into tomorrow, we'll be dealing with new all-time highs in Netflix. So that one could be fun. Look, here was your last earnings report down here in January. What was this? Almost 100 point, no, about a 50, 60 point upside gap, and it looks like we're basically going to do that. We're going to repeat that this time if this $530 after hours price holds into tomorrow. So Netflix certainly be interesting tomorrow to see how that acts at new all-time highs. Amazon's hanging back now at the top end of this range, 388. Pretty important level. We tagged it on the highs yesterday. Just basically a quiet day today. Let's see if this rolls back over and heads back down to the lower end of this range, or if we are just kind of basing out sideways before we make another attack and take out these highs here at 388. That's a good one to keep on watch. Now Facebook, I was in this coming into today, so I actually got long it. I actually took it long right here on the close on Monday, and granted it wasn't a great looking close at all for Facebook on Monday, but the market, as you can remember, was pretty weak as well. So I did take it just because it was barely holding on to basically $83, what I wanted to see. Held it yesterday, got whipped around, but ultimately closed strong yesterday. And then today, you could just see it right at the beginning of the day. Market was kind of pushing, ramping higher. Facebook's ramping lower in the first half hour, completely diverging. So I did end up selling out of my Facebook right around 82.70, and it's happened to be where it closed today. So small loss. I'm not in it. Earnings next week. I wanted to see if we could just get a nice clean squeeze into earnings, or at least a few day pop off of this Monday's action, but we don't seem to have it yet. So Facebook again still holding relatively up here. I think basically Monday's lows is a great line in the sand, $82 and then 81. So 81 to 82 is a pretty important level for Facebook to hold, especially if you look at a weekly chart. But again, with earnings out next week, everything can change on that. So just keep that in mind. Twitter, again, still just kind of flagging out here. Look for some type of high volume snap of this trend here, this just flag-like pattern here that is developing in Twitter. We did poke above yesterday's high briefly today, but you can see that was basically faded. We closed flat, so I think you have a pretty nice clean level defined here, right around $52. I think if Twitter can get back above $52, you might get a play back to the upside of this. So keep that one on watch. Next, let's look at GoPro. GoPro up 2.6% today. Can't really love the close, but green is green. It did gap up and hold basically the gap from where it opened in the morning. So GoPro is still trying to prove itself here. This looks suspiciously like some type of bear flag, but it's getting it done, and the bulls are kind of grinding higher. So it's not a clean momentum pure play where you're seeing several green days in a row, but you are getting that back and forth grind higher. So for GoPro, $44 is a pretty important level, and I would just say the lows from yesterday, Tuesday, would be equally as important, right around $43. So you got your levels carved out for you. Alibaba, this one's still in this kind of holding pattern, this basing pattern. I like it. I don't mind that it's hanging out here because it is kind of coiling, getting nice and tight. That's what I like to see for a breakout, and $87 more or less is the breakout level I'd be watching in Alibaba. Now let's get into some other names. I had a lot of names on my watch list trigger today, and some with some big explosive moves. I've talked about some of these names before. KLXI is one of them. I was been patiently waiting for this one, and it just took off, screamed higher without me. So unfortunately I missed this. I'm not with it, but if this is going to be a true bottoming pattern here, and this was a sort of day one move, this is something that could present itself another opportunity here in the near future. Granted, it's been up now 3 days in a row, so I'd like to see it cool off here, but if it can go high tight for me for a few days or even a session or two, I might get interested in it again. It's been basing out for a while now. It's a recent IPO, so keep that one on watch. Yelp is the next one. I am actually involved in this. I took this today, basically right where it closed today is my entry. So I'm looking for some follow through here. I'm aware that earnings are out in, I believe, 2 weeks. I got to check the date again, but I know there's some time here on earnings. So I like that it's been, basically hanging out here pretty tight for the past, few weeks for sure. There are a lot of eyeballs on this. That's the only thing that sort of deters me, but it's certainly a valid play. Up 4% today is a nice play. It's into this gap, so let's see if Yelp can continue. I'm involved in that one. FSLR. This one, real nice move today as well. Was basing out, basically had this gap up here back from late February, ran higher, went sideways now for basically a month, and now it made a real nice move, up 4% today. Another one that just took off real fast without me, and unfortunately I'm not in this, not willing to chase this one quite as much, but still, this looks good. IBM, This one does have earnings pretty soon, and it is basically at the top end of this recent range. I really like the setup here. I was really hoping to play this breakout if I ever got it above 165. It doesn't look like I will, just the way earnings are kind of aligning with this name. So keep it on watch, keep earnings on watch, and you know, you could find something there afterwards. And then GLNG. This one here breaking above $36, faded a little bit today, but a nice little basing pattern here. You know, look to see if maybe some continuation, maybe a flag out here above $36 to get back involved in it. And then a couple other names here, HAR. This one to have on watch, basically above 140, 139.50 or so. This one looks like it could get going again. Take a look at a weekly chart. You can see this big explosion to the upside here back in end of January, and now it is looking like it could be ready to leg higher again, so have that one on watch. Monster, this one here had a nice gap up as well back in the end of February. It's been hanging high and tight, basing out sideways here, holding that gap up, so keep this one on watch. It's not ready yet, but above 140, that one looks pretty good. And then finally VAR, this one here I was looking at earlier in this range here, so this pattern has sort of morphed out here, but again you can see the way it's been holding pretty firmly underneath this $95 level. So I think if you get a breakout above 95, that one could lead to some further upside action in VAR. So that's what I have for today. Good luck trading out there. Again, earnings season, check all of those dates, and I'll see you next time. Thanks for watching.